Fasten your seatbelts, it's going to be a bumpy night, was famously uttered by Bette Davis in the 1950 film All About Eve. I was reminded of this line the past few weeks as I've watched the stock market whipsaw in response to tariffs, real or anticipated. Analysts are struggling day to day to keep up with what is happening and its impact on the economy. By some accounts, the likelihood of a recession is increasing, while others see a more stable environment ahead. Only time will tell. But what we do know is that consumers are less confident about the future. The University of Michigan's Consumer Sentiment Index dropped sharply in April to its second lowest reading on record, dragged down by inflation and employment worries. We also see CEOs pulling back on expansion plans and revising down revenue projections. A wait-and-see attitude is in evidence across the economy. Delta, the largest employer in Atlanta, recently cut its first quarter revenue expectations. CEO Ed Bastian explained that, with broad economic uncertainty around global trade, growth has largely stalled. We're also hearing talk of a slower than expected start to the spring home buying season. Jeffrey Mesger, head of KB Homes, noted, consumers are working through affordability concerns and uncertainties related to macroeconomic and geographic issues, which are causing them to move slowly in their home buying decisions. But while Wall Street is struggling, it's far from clear what is going on Main Street. In fact, recent reports have been largely positive. The March jobs report was unexpectedly strong, with the creation of 228,000 new jobs despite federal cutbacks. Locally, the cuts in the federal workforce hit home, with 2,400 positions expected to be cut at the CDC. Wage growth at 3.8% is outpacing the inflation rate that came in again at an unexpectedly low 2.6% for March. These strong economic indicators may pull back in the months to come if upward pressure on prices from tariffs and layoffs impact the financial picture for consumers. We'll have to wait and see. But what about the housing market? How does turmoil in the financial markets impact buyers, sellers, and real estate sales? The good news is that uncertainty is pushing investors into bonds, continuing to fuel the gradual drop in mortgage rates we've experienced since early January. Freddie Mac recently reported the average 30-year mortgage rate was 6.62%, quite a drop from the 7% in early January. Looking ahead, we are likely in for more volatility in rates as markets react to trade and tax policy changes. The data for the greater Atlanta area for the month of March paints a picture of a competitive market building momentum for the spring home buying season, albeit still less active than a year ago. On a monthly basis, we have more listings, fewer days on market, more closings, more pendings, and more properties selling at their original list price. However, compared to last year, closed sales are down 6.4%. The average sale price is up 1.3%. New listings increased 15.9%. Homes for sale year over year are up a whopping 45.3%. Pending sales in March down 8.4% compared to a year ago, and days on market at 21 is up 50% year to year. Looking ahead, where does that leave us? Observations from two leading real estate economists give us dueling perspectives. Quote, lower rates may be cold comfort to prospective buyers who are increasingly worried about job security and inflation, from Lisa Sturdivant, chief economist with Bright MLS. And then the influence of lower rates generally outweighs job losses in most recessions, a reminder from Lawrence Yun, chief economist for NAR. What is the best advice you can offer your clients at a time like this? With the future direction of the economy and even mortgage rates far from guaranteed, perhaps the date the rate, marry the house conversation is relevant. For clients ready to move now, rate volatility means being prepared to act quickly when conditions are favorable, and that is more important than ever. To close with another familiar phrase, while March may have come in like a lion and out like a lamb, April's showers are bringing a downpour of concern and confusion. The situation is in flux. Please stay tuned. Take a look at market intel on the FMLS website to access the most current market statistics. Remember, they are updated weekly. So if you're interested in resources relative to our market dynamics and want to dive into local markets, we've got you covered. For FMLS Market Intel, this is Leslie Appleton Young. See you next time.